Now, there were a couple of key points to sort of mention also, and these were sort of something that were asked to me or asked within one of our sort of groups. Okay, and I'd like to sort of address these questions because I think these questions are great for everyone to understand as well. Okay, so I think the first question was that, okay, so, you know, someone's outlined that you should have a morning process, but also you should also consider the market structure across different assets you're trading. So the question being is the fact that when you're looking at the markets first thing in the morning, how do you define which way the markets are going to sort of move? What's going to be the driver of the market? Now, there's a couple of points that I want to make, right? There are three positions you can take sort of in the markets. Okay, there are three positions you can take in the markets. One being is you could buy. The second is you can go short, you could sell. The third is you could sit on your hands. Okay, you don't have to take a position. Not taking a position is taking a position, in my opinion. Okay, you know, you not losing capital is you preserving capital. So remember, not always taking a trade and eager to take a trade is key. Okay, it is key, guys. So it's important that you remember that also. Okay. Now, first thing in the mornings when you look at the markets, whatever the markets you might be looking at, for example, let's focus on, look at dollar yen. Let's look at dollar yen and let's drop it down to sort of a much lower time frame. We're looking at the 5-minute time frame over here. Okay, let me see if I can just bring up one of the key settings that session break. We'll put up a session break. We'll just make sure. Yep, that's fine. Put that in there. Okay. So we're looking at sort of the session. This is from last night. Okay, so this is sort of, you know, the Sunday night open, which took place. We're looking at sort of 10 p.m. So we're looking at dollar yen, 10 p.m. Markets drove higher. Okay, the strength of dollar outweighed the strength of the yen. So the yen, we saw weakness. The dollar, we saw a lot of strength coming through. It reaches sort of a peak level, the 107.90 handle. Comes back to retest there. Now, if you look at a slightly higher time frame now, right? So I'm looking at a 5-minute time frame. If I go on to a 10-minute time frame, what type of candle formation would that be? Just to highlight this, guys, what type of candlestick formation would that be? So if I just highlight that there, right? It's important you remember to start to put candlesticks together. Okay, start to sort of form what the higher time frame candlesticks looks like compared to the time frame that you're on right now. Okay, because that gives you a great indication of what what could take place going forward. You don't always need to switch to the higher time frame. You should just have that sort of insight already. There is actual terminology by the STA, the Society of Technical Analysts, which defines what this is known as. There's a specific terminology. Don't remember that terminology. Again, certain things you don't really need to sort of be aware of. But this is you merging the candles into sort of one candle from the higher time frame, and it builds a better picture in your mindset. Okay, so we've seen prices. Am I on the correct pen? Yep, cool. Alright, so we've seen sort of this being the market open. Market open leads to a bullish drive. We've seen a strong bullish drive taking place. A lot of dollar strength coming through. Okay, you can see a series of higher highs and higher lows. Another higher high, higher low, another higher high. Okay, all the way through from this low up to that high. How much of a pullback do we see? Very light shadow sort of pullback. Okay, very light sort of pullback all the way through until it reaches the 107.90 handle, where we start to see larger pullback taking place. In fact, this pullback almost came back to test the previous low. So it hasn't broken the previous high, and it hasn't broken the previous low. It's still within a bull trend. We're still in a bull trend, but it's done a larger correction, almost a 100% correction back to the previous low. Okay. You know, so that's your first indication that the market's strength to sort of drive higher is starting to slow down. It's starting to slow down now. And what takes place from this point of view, so that can be seen as a key level of support. Now, if I just remove the pen, just give me a second. So this can be seen as a key level of support. And we've got this as resistance now. Okay. Come back to my pen. So that drives a little bit lower. Again, a little bit, you know, buyers stepping in it in this region here. So we had buyers stepping in here. Now buyers stepping in over here. Comes up to this point over here. doesn't really get back to the previous level of resistance, doesn't really get back to sort of the previous level of selling pressure coming into place, starts to sell a little bit lower there. Okay, so that shows that the sellers are eager to get into the market and really short this and drive this lower. Now there's a battle going on here now, okay, and price is now consolidating between sort of a previous level of high and a previous level of low, and there's a consolidation between those buyers and sellers. The strength of those bulls and bears is almost matched equally, okay. So again, this sort of drives a little bit lower, pulls back slightly, a bit lower. Look at the candlestick formations, right? So it's either doing a large candlestick formation like this, like almost a Marabuzu style, or very small candlestick formations, okay? When you see that, there's a lot of uncertainty still ahead, and it hasn't gone into sort of, you know, define the direction. Now, the direction is not going to step in because until new information comes in, or it gets to an extreme level. That's the question, okay? So we're looking for either new information to step in before it either goes long or it goes short, right? Sort of from this consolidation region, or we're waiting for it to reach an unrealistic region, okay? So an overbought or oversold region before a flood of orders step in, okay? And in this case, we saw a breakout. So this being your initial breakout taking place here. So we had that breakout coming through. You can see how it comes up to this point over here. A little bit of rejection here, but then it has that instant breakout. Once you have that instant breakout, known as a false breakout, that's when the selling pressure really steps in, right? So there's a lot more sellers looking to sort of sell in at the 107.95 handle than there was the 107.90 handle. So that's a key level of resistance. That's your extreme. Okay, that's the extreme. You can almost see this as a zone if you wanted to on a slightly higher time frame, right? So that leads to that initial selling sort of, you know, view. And as I mentioned about this candlestick formation, right? So what happens? So it starts at this region here. It drives higher, right, up to sort of that point there. Apologies for sort of the line, should have been straight line, but hey. From this point, gets that high point, and it goes down all the way back to the low, and pretty much closes slightly above the open, even though it reaches sort of a low somewhere in this region over here, right? So in fact, this is sort of a doji, but a long-legged doji, sort of almost you can see that as what type of stone when it comes to a doji, but being a specific doji. What type of doji is that when you have a long wick to the upper side? Hello, well done. Gravestone. Okay, that's a gravestone doji. Right, so that alone sort of leads the market to, you know, a flood of orders stepping in, and the strength of that selling pressure just comes in, right? So as this drives lower, it does the next pullback. So remember, why does a pullback take place? Why does that retest take place right to the back to the resistance? Because this initial selling pressure here, it didn't really flourish. It didn't really gain that momentum. Okay, so what's taking place now is some of these you know, sellers over here taking a little bit of profit here. Okay, some of them are taking profit here. It drives a little bit higher, waiting for the next amount of sellers step in. That's another beautiful sort of candlestick formation on this time frame. Okay, on this time frame leads to the next selling pressure, and now we have that series of lower lows and lower highs now. Okay, so we've got the, you know, that's a low, lower high, another low, lower high, and that just continues, okay, until it gets to this point over here. We're in this zone over here, we have a larger correction taking place. Again, you should look to sell. You should only be looking to sell when you analyze the chart correctly. So you can see now we've gone through, right? So from the overnight, looking at dollar yen on a 5-minute time frame, how many types of structures have we gone through here? I mean, this question that was put into our group, you know, defining the market structure, this is how you should analyze market structure, right? We've got 3 phases here. We've got 3 phases over here, okay? You can, you know, we've got this phase here, this phase here. This is your bull trend. That's your accumulation stage, okay? So that's your accumulation stage, okay? Accumulation stage. This over here, this sort of, you know, in this region here, sorry, this is getting a bit messy here. This is your what is known as distribution stage, right? The market's starting to distribute in this region here. This is your distribution stage, okay? This here has got its own name as well. Exhaustion, right? That's the exhaustion move, okay? That's the sort of market becoming exhausted in this region here, right? And then we have that move lower. That's your downtrend. Okay, that's your downtrend. Okay, that's your sort of long-term downtrend. We're waiting to sort of get to a region. We're waiting to get to a region where we have a bit of consolidation, stagnation, and then we're waiting for the next accumulation stage to begin, right? So this is how you need to define market structure. Now, you as a trader need to determine this, right? When you're there at your desk, you wake up at, I don't know, 7, 8 in the morning, you start your analysis. You know, every morning we do that 7:30 video conference call to define, you know, help you structure the day ahead. Okay, we talk about the most trendy news from overnight. We look at asset prices, round numbers. There's a number of sort of, you know, steps taken already for you to define the market structure. Now you need to determine what is that current market structure to take it to the next step. Hopefully that answers your question from that group. If you could just give me an indication if that makes sense.